Hey guys, hope your day is going great. It's a sunny day here. Well, sort of sunny, but it's pretty cloudy outside. It just in the Sunshine State, so it's kind of always sunny. But I wanted to discuss like if you have a lot of CDs, a lot of cash that's just sitting there, and you're probably happy right now. You're getting like 5% um, in the bank, like 4 to 5%. I don't know. It's now it's okay now, but that it's sitting there. But I think eventually you got to get rid of that cash and put it into the market, because I think the once the Fed starts raising rates, I mean lowering rates, they already raised enough. But yeah, if they start to lowering rates in the fall or whatever the starting that, I think your interest rates are going to drop, and then the market itself is going to pick up, and it's going to, you're going to have more opportunity in the market, like buying Nvidia, Tesla, all like the seven magnificent seven stocks, DCA or whatever that you can, instead of just your interest rate's going to go down on your cash, and then I think the market's going to pick back up. And if you're sitting in cash and it's just going to be getting less and less, you're going to lose out on those opportunities. So I think if you're sitting in cash, just right now, that's what I'm thinking about, just moving a lot of that into the market instead of just sitting on it, which it's topped out. It's not going to go any higher than what you're getting 5%. Then once they start lowering those rates, your interest rates are going to drop. You're going to make less money, and then it's not really losing that like you're making 5%, and something like Nvidia, even last year you missed out on that opportunity instead of switching it over to the stock market, which is just it's better appreciation in every sense of the word. But and also, if you may make 5%, but you're losing opportunity costs, like the opportunity to get in something that's really gonna make more money for you than just that little 5% that you're getting in a CD or cash is sitting in the bank. I mean, it's good. The only reason to have cash is like it's a good, you want like 3 to 6 months savings for emergencies or anything like that. It's good to have that lump sum of cash there just in case. But for right now, I think not really right now, it's the June, July, but I think once we start getting into October, November, once they trigger that one rate, it's gonna be a trigger effect that all the banks are gonna start dropping their rate, even though they make so much off the difference. They make enough already, but I just think you're gonna lose that chance by sitting in cash, and then that whole year you're gonna miss that opportunity when we have another leg up. So I don't think the bull market is over yet. I think there's still time for like another leg up, and then we'll go from there. But right now, I think you just gotta just think about getting out of cash, just starting that process, and then if you have CDs, I would probably just let them ride, and then until they re-up or you don't, and then just wait for those to settle and then switch over to the stock market. But I think if you just got a bunch of cash like sitting there just getting that 5% or 4.2% or whatever, I think now's the time. I think you'd rather switch it into like something Nvidia or Tesla, Palantir, some of those that really gives you a chance to like 10x your money, instead of just parking it in cash. It's doing really nothing. And then plus, if it's like 5% cash and it's not tax free or anything like that, you got to pay tax to the government, and then you're even making less than 5% on your money. then you're better off in the stock market getting into something like a Tesla, Nvidia, Palantir, Uber, any one of those that really has a really good chance. Anything from the Magnus 7 or anything, there's a lot of ones like Kava, so another one. There's a bunch of good ones out there that are just starting out. I mean, some that are really, really starting out that haven't even taken, shown their true potential, like Uber and Kava, that you could really park your money in instead of just hoping you get that little 5% and hoping that the Fed's going to keep the rates high as the way they are. And I don't think so, because there's so much cause and effect that's having on the economy, like employers not hiring people because the rates, they can't get, small business can't get loans to hire people, and it just has a big effect. And it hasn't really affected somewhat inflation, but it hasn't really slowed down the lowered home prices or anything, making homes more affordable to millennials or anything like that. It's not helping change things like that happened during the 2008, that period of time. But yeah, think about it. Get out of CDs and think about getting back into the market. If you like this video, like, subscribe. I'll see you guys in the next one.